Hello and welcome to Banking Frontiers Live. We are in midst of some wonderful fintech conversations. With me today is a very interesting personality from the field of retail payments. His name is Suhail Samir, and he is the group president of Bharat Pay, which is one of the celebrated fintechs. And let us try to know what makes this fintech a celebrity. Hi,
Hi,
Suhail, welcome
thanks
to
for
Banking
being
Frontiers.
good.
Maybe I am just thinking as an industry guy. Maybe there can be an issue is due to zero MDR, the kind of costs may be escalated, and that costs have to be also made because somebody has to pay for the technology, for the processes, for the systems to run.
Yeah,
So how can this be managed when you increase your business multifold? How does it get managed then?
no, absolutely. There is a cost to UPI, even though the MDR on UPI is zero. But as you rightly said, there is a technology cost, there is a payment settlement cost, whether you use IMPS, NEFT, or RTGS, and that's sort of the cost of doing business, right? But to be honest, lending in India is a established behavior, right? When they were not banks and when they were not digital lenders like us, there used to be the corner money lender, right? So it's a business where if you can get your risk management sorted, it's almost impossible not to make money. Therefore, at least our belief is that payments is the fastest way to become a good lender, right? So therefore, it's sort of a cost of doing business for us. In other words, a bank uses a DSA type network to source loans, right? And they will give that DSA at 2.5%. As long as I can ensure that enough of my merchants, I have a strong enough value proposition on the lending side, and enough of them take loans from me, the cost of the payment sort of becomes my cost of acquisition for the loan, right? So that's at least the way we see it, and what will really make the business profitable or not is do I have a proposition for enough of the merchants on my platform to take a loan from us, right? So if only 2% of my merchants take loans, then maybe the cost of the infrastructure is not justified. But if 25% of my merchants take loans and take repeat loans, then this is sort of a very, very affordable cost. In fact, so far we've seen that 55% of the people we've given ever a loan to have come back and taken repeat loans, right? So it gives me the confidence that when I am able to scale this, we will not only cover our cost of payments, but also make hopefully handsome profits.
Interesting. And I think you already have a history of what kind of money is the merchant making thanks to the kind of payments that is flowing in into your accounts. So
Yeah.
automatically that gives you a better judgment for risk management as well.
Yeah, better judgment on how much loan to give, what tenure of loan to give, and the fact that we are in the money flow, it also allows us to collect better, right? So in a conventional banking model where you are resorting to a EMI type system, 30 days you don't even know that the customer does not have intention of paying, right? And 30 days you may feel, oh, why is he not paid? 60 days you will get worried when the second EMI is not coming. But in a digital lending ecosystem, if I don't get my payment for 3 days, I'm already worried. If I don't get my payment for 7 days, I'm like already thinking what corrective action can I do, right? So I think that enables that just payment infrastructure again. I come back to enables me to do this much better, and therefore underwrite bigger as the payment flow sort of increases at the merchant level.
Absolutely great. And of course, when you are scaling up to 65 cities of India now, as you have put it across in your some of the announcement, so by December, and that the kind of growth that you are projecting there is going to be massive. It calls for a very good amount of risk management on one side. At the same time, what kind of accelerators, where have you reached in that 65 city today? And what kind of accelerators are actually driving that?
So we are almost on track to get to 65 cities by the end of the month. I think there are 3 or 4 cities left, predominantly on the east side of India, and that's because we historically had very limited presence in east, and it's just taking a bit more time to get the right talent in, right? And I don't believe in launching a city with suboptimal talent. Eventually, a city manager dictates how well merchant onboarding happens, the merchant experience, are they the right merchants also to onboard or not? So we're taking a bit of time to get east sorted, but plus minus 15 days we should get to our 65 city target.
Lovely, lovely. And what are the key accelerators that are helping you get there? Is it the only the payment business or the lending or something else also?
So one is just the aftermath of COVID, right? So I think a lot more people have become educated about digital payments, and QR is sort of as contactless as it can get, right? Even on a card payment, you still have to give a card to someone, and then maybe also if it's a small transaction, it's a large transaction, put a pin in on the swipe up machine, right? So I think QR acceptance and understanding has grown, right? So therefore, merchants themselves are actually downloading the app and actually ordering a QR, right? So what we call digital onboarding or organic onboarding, a merchant coming himself and saying, I want to do this, used to be a very small portion of the business a year back, right? So today it contributes to 20% of new onboardings, right? So and that's just the impact of sort of I will put it as an impact of COVID or the good impact of COVID for a change for us. The second thing is I think as POS has come in and or card acceptance machine has come in, and as people have become more aware of our lending offerings, as people have become more aware of our insurance offerings, I think many merchants see us as a one-stop solution to many of their needs, unlike maybe a competitor which is only doing one or two of these, right? So therefore, the acceptance of our products in the shop has sort of gone up significantly. The third thing, which is like when you have a network, now the network impact always works, right? So if I was in a store doing my QR and there were two other QRs, I was one of three and maybe getting 5% of his digital payments flowing through me. As soon as I have a QR as well as a POS, the digital flow anyway increases to 15%.
How are you working on technologies? Which are the things that actually interest you, especially from the technology perspective?
So I think I'll talk about three things. First is actually the core of our business, which is the settlement success rate, right? If transaction is not happening, money is not entering the merchant account, you may try whatever else, the business is not going to get built, right? So we do invest a lot on AI and machine learning on that side to say which bank has the best success rate at what point of time in the day, right? And then the system learns itself, right? So how do we? This payment is a complicated system, right? So there are like three or four counterparties on the payer side. There are three or four counterparties on the guy who's getting the money side. How do you do the mix and matching on a lifetime on a live basis to ensure that the payment happens and the settlement goes to the merchant account is where we probably invest 50% of our resources in terms of technology and people, because if that's not going to go get right, then you are not really in the business itself. The second part is on the lending side, right? So like it's very simple to say at one level the guy is doing 500 rupees of transaction a month, so you give him 500 rupee loan, but there is a lot more data which needs to get in, like so how many transactions per day, how many unique payers, how many contacts does he have on his phone, is he a legitimate merchant or is he someone who's like frauding the system to acquire a loan, how do you sort of put in checks to ensure collections happen automatically. So there's a lot of technology which goes on that side, both to increase the number of people who are eligible for loans. That's one metric, right? Because it's very easy to say I will not give a loan to anyone because your CIBIL score is low and you don't have an ITR profit which is sizable. But how do you make more and more people eligible yet not lowering the bar on underwriting by using alternate data is, I think, second place where a lot of technology is being used. And the third is the pure product, right? So how do you make your product experience seamless for a merchant, simple for a merchant, right? So how do you keep the product simple and how do you customize the product to each individual merchant, right? So if you're a merchant who is interested in loan, then should you be seeing a loan page and a Bharat Swipe page and a XYZ page versus if you're a cash rich merchant, should you be seeing a digital gold sales page, right? So how do you use data and the past behavior of the merchant to only show him three things out of the 50 offerings you have, and how is it customized to each individual merchant? I think is something I would say we do a decent job on, not a great job on, but I think that's something which is sort of very important for us, and there is a lot of effort going behind that.
What kind of learnings would you like to share with the fintechs of tomorrow who want to, be identified as the unicorns of the tomorrow?
No, I think I'll actually come back to my original statement. Think consumer first, right? So whoever is your TG, define what really matters to him, right? India is a unique market, right? And it's not a West market. Many places you can actually borrow the concepts of the West and apply blindly in India. But financial services is not necessarily one of those spaces, right? It's a very different low margin industry, especially if you're looking at the SMB side. And on the consumer side, again, it's low margin because most of the consumers who use technology and use apps are actually people like us who have access to bank finance, who have access to and who are bargain hunters, right? They will check everything out. So really, I think starting with what is the value proposition and why it will work versus what is the idea I want to copy from the West and bring to India. I think this is a very, very fast moving industry. And this is the industry which is you are handling someone else's money, right? It's very easy to give someone money. It's very difficult to get someone to give you money, right? So I think a lot of focus on consumer engagement and building trust. If you are not able to establish that, no business will get built, right? So till you are comfortable that whatever transaction you are enabling has a very, very high success rate, I would say don't even think about monetization. Think about actually first fixing the core, because monetization will lapse very quickly if you are not able to sort of deliver on the core promise, right? So I think these are the two things I would say: consumer first, focus on building trust with the consumer, whoever that consumer is, and once you have these two, hopefully this will automatically mean you have a value proposition which is attractive to the consumer and where therefore you can make money.
Fantastic. I think that was a very good encapsulation of what you have learned out of all these years, how you have transitioned into the new business, and of course, how you can advise the future entrepreneurs getting into the payment space. And very interesting to get it from an entrepreneur like you who has not been from a payments background, but more from diverse background. So great, Suhail. It was a fantastic conversation.
Thank you very much. Thank you for
Thank
having me.
you very much for being with us. We look forward to more interesting conversations with you.